don't do anything. If you can hear me and go to webinar, would you let me know as well? Thanks. Oh, Kelly says he can hear me now. All right. Well, there we go. I hope you're doing well today, guys. Thanks for coming. Sorry about the technical issues that we had there, but looks like we've got them sorted. I want to thank everybody that came today, either in the GoToWebinar room or in the Metastock room. Thank you. Let's go ahead and read a legal disclaimer, should we? Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So it is with great pleasure today that I want to introduce Vince Vora. Vince has been a partner of ours for a number of years. He has a very, very popular add-on called Voracity, and he actually has a few add-ons with us, but today we're going to talk a little bit about growing an account in a Corona storm. The things that I'll say about Vince, just real quick, is he is really, really good. I like kind of the tempo and the way he explains things. He comes across as very, very understandable, very relatable, and he's one of the best presenters that we have that work with us. So Vince, there's an intro for you. How are you doing today?
I'm doing well, Jeff. Thanks for having me on. Really happy to be here. I'm just going to try to share my camera here.
Yeah. I'll let you know when it comes through. I can see your screen already for the PowerPoint. So.
Okay. And let's see.
And there you are.
Can you see me now?
Yeah, you look great.
Great. How are you?
Good.
Good.
I'm going to get out of the way. I was going to mention something about how tanned you are and you must be enjoying your summer and stuff like that. But I think I'll let you just roll there. It's your turn.
All right. Excellent. Well, thanks again for having me on. Really appreciate it. And welcome, everybody. Glad to be here with you today. As Jeff said, I want to talk to you about Voracity. These have been trying times for many reasons, but the markets have been extremely interesting, to say the least, over the last little while. Since that dip in late February, early March, we've had one heck of a comeback, most of it attributed to a handful of stocks. So that, to me, makes me a little nervous about this market, but we'll speak more about that as we get through. Before I get to Voracity, I do want to say I think tomorrow is going to be important. First thing tomorrow morning, we do get the jobless claims number, and last week, if you recall, the jobless claims number dipped or ticked higher, back above 1 million. Jobless claims for that week, where the previous week we had dipped below 1 million for the first time in about 7 weeks or so. So if that trend continues and we go higher again, that is not going to be good for the markets. We also get the GDP number, and I think expectations is a minus 32.5%. It's a big number. We'll see how that does. And then, of course, the Federal Reserve Chair, Jerome Powell, will speak. I believe it's at 9:10 a.m. Eastern time tomorrow. So not sure if he'll be done. Probably won't be done for the opening of the market, but keep an eye on the futures market tomorrow morning. We could see a big move early on as we head into the open tomorrow, okay? And we can discuss that a little more as we go forward. But I want to share with you what I call my baby, which is Voracity. So let's get started here. Before we do, I do want to mention that trading can be extremely risky. So please don't go out and trade with real money until you're completely comfortable with the system you're using. Again, I'm Vince Vora. I'm the head trader here at Trading Wins, and I've been doing this. I've been in this business for well over 30 years now. Over that time, I've developed several of my own strategies and trading systems, but recently, and by recently I mean the last 7 years or so, I have been focusing on coaching students, both in this format as well as one-on-one. Over my career, I've managed several large accounts. And now, after doing this for quite some time, there are many retail traders and hedge funds out there that do use our strategies. In today's presentation, what I'd like to do is start with my money management rules. There's really 5 simple rules I'll throw on one slide here. The reason why I want to share these with you, and I do this every single time, is it's useless really having any sort of strategy if you don't have a strong money management plan that goes with it. And to me, where most traders go wrong is, the lack of discipline or managing their emotions. And I think the money management rules really keep you in line as a trader. And so these are rules that I have been using for many, many, many years. For those of you who have seen me present before, you've probably heard the story of how very, very early in my career, I took a very sizable loss in the market. I thought I knew a lot. I obviously didn't. And I paid a very expensive lesson for it. But that loss really is what allowed me to become the trader I am today. And so the one thing I did was put together a set of rules that would make sure I never took another big loss again. And I haven't. To this day, I have not. And I make you a promise that if you follow these rules, you will never take a big loss again. Okay. Then we'll talk about the components of Voracity. This all came about in my search early on for the Holy Grail. I'm sure many of you have spent many hours searching for the Holy Grail. We all know it doesn't really exist. There's no perfect system, but this is how the system came together. And I'll talk a bit about the components that make up the system. I'll then show you how it works and why it works, but more importantly, how it can work for you. Okay, and of course, along the way, I'm happy to answer any question you may have. Feel free to type it in. Both myself and Jeff will keep an eye on the question panels, and we'll jump in on those questions as we go. So, money management. Let's talk about money management. It's not talked about enough, I think. And really, the first rule here, some of you may laugh at it when you first see it, but what I mean by trade with a positive mindset is most traders make mistakes when they're either not feeling well that day or are distracted, and they have a difficult time focusing on the task at hand. So when you get ready to trade, make sure you turn off all distractions. What I like to do is I like to have something like CNBC on my TV in front of me, but with the volume off. I'm there, it's there only in case there's some major headline that comes across and it's easy to see on the screen, but I'm really not interested in what any of them have to say. So I can focus on my task at hand. Secondly, and this is probably the most important rule here, is to trade with an amount that feels, not necessarily is insignificant, but feels insignificant to you. What I mean is, if I asked you to put $5 in a trade or even $50 in a trade, would you sleep at night? Sure you would. Would you worry about it at all? No, and you'd probably be able to stay in that trade for the life of the order, right? As where if I asked you to put 50,000 in a trade, for most of you, it'd probably make you a little nervous, right? Or a lot nervous. So that's what I mean. Normally, what you hear is, to be successful as a trader, you need to remove your emotions from your trading. Well, how are you going to remove your emotions if you have a very large sum of money that means a lot to you in any particular trade? It's going to be impossible for you. So do yourself a favor and trade with an amount that feels completely insignificant to you. For some of you, it'll be a few $100s. For others, it'll be several thousand. Again, the specific amount doesn't matter. But if it feels insignificant, you will be able to follow your rules much more easily. Okay. Now, one of the ways that I try to put a lid on the amount of risk that I take, because I am very, very conservative. Ever since taking that loss, I am probably one of the most conservative traders out there. What I do is I never allow myself to put any more than 5% of my overall account balance in any one trade. And the goal for you, the goal should be to start there, okay, and work your way down. So as you grow your account and your balance grows, the percentage you put into any one trade should be lowered. So you want to go from 5 to 4 to 3. If you can get down to 1%, imagine having a sizable trade on with just 1% of your account. That should be your goal. That way, you'll never worry about it. If the trade completely blows up on you, you lose 1%, it's not a matter. You can easily make it back, okay? So please follow that rule. Also, there are many things in the market that we cannot control, okay? They're completely out of our control, the black swan events. The coronavirus being one, 9/11 being another. And so hopefully we'll never see one of those events again, but in all likelihood, we will. And so the only way to manage risk around that is to always keep half of your account in cash. Now, some of you may think, well, that money's not earning anything for me. Doesn't mean it shouldn't earn anything. It should be earning some interest, but it's there as a safety net. In other words, if you get surprised, sorry, there must be a mic open somewhere. I'm hearing a cell phone or something. If you get surprised by one of those events and you only have half of your account in the market at any one time, first of all, the loss you take from there will be much smaller. Secondly, you'll still have half your account available, even if the other half is gone, to put back to work and make back that loss, okay? And lastly, here, you should always try to spread your trades out. Think of it this way. Very often when we have a big day in the markets one way or the other, right? The Dow might be up 300 points, S&P might be up 25. Look today, the NASDAQ was up almost another 200 points. Whenever you get a day like that and you do a search for trades, chances are you're going to get many in the same direction, right? So on a night like tonight, if we do our search, we're going to get many long trade candidates, right? If you go out and you immediately jump into 6, 7, 8, 9 trades, and the very next day the market pulls back against you, which has happened many times, you're going to find yourself in a huge hole. And that's exactly what you want to avoid. So what you want to do is, out of that group of trade candidates that you find on any given day or any given time frame, you want to select one, maximum 2 of the highest probability trade setups there are there. And hopefully we'll have time today to talk about how you differentiate one from the other, okay? So again, the session's being recorded. If you didn't take notes, no worries. Go back to the recording, pause it on this slide, write down these 5 rules, and I promise you, if you follow these, you'll never take a big loss again, okay? Now, before we get onto the system, a couple other rules we live by here at Trading Wins, and the first one's really for those of you who are just starting out. What you want to do is take profits when you have them, meaning at the beginning, it's more important to grow your account and build your confidence than it is anything else. So when you're starting out, take profits when you have them. If you follow the Voracity strategy, first of all, I'll tell you it's super conservative and very, very safe. So even, taking small profits, even when you take small profits, you can do well with it. But eventually, you're going to stay in a trade a little longer as you gain confidence. So it's super important at the beginning to take those profits, not only build your confidence in yourself as a trader, but in the system that you're using, okay? And lastly, if there's one thing you're going to take away from this webinar tonight, it's number 2 here. This is not about you. Try to get that in your head. This is not about you. It's not about whether you can predict whether a stock goes up or down, or a futures contract or an option. It's not about that. If you're in this to be the world's greatest stock picker, you're going to lose money. I can almost guarantee it. Okay. What you want to focus on is following the rules. And if you build the right habits to be disciplined, and when you take a trade, take it with proper size and so on, and follow those rules that I just gave you. Now, the important thing here will be how much money you make when you're right versus how much money you make when you're wrong. Okay, we're all going to be wrong sometimes, but the important thing here is to make more when you're right than lose when you're wrong. Okay, you want to keep your winners big and your losers small, and that's where Voracity comes in. This is where one of the parts of this system that took so long to come together. Okay, because with risk comes reward in the market, and if you try to eliminate risk, the reward usually drops. So what I wanted to do was find some way to really limit my risk without capping my upside. And that's what took so long, but we finally put it together here. So what does Voracity do? Well, first of all, behind Voracity, there is a number of indicators and oscillators. There's about 6 in total that when they line up properly, it gives you a really high percentage play in the markets. And I know this through not only back testing it for years, but forward testing, meaning trading it with real money for many, many years. And we've been selling this now. We've been partnering with Metastock, I don't know, 6, 7 years at least. And before that, I had already traded it for years. So I can tell you it's very, very consistent, but hopefully I'll be able to show you that this evening. So how does it work and why does it work? Well, the difference between this and the other systems I've designed in my career is that this was really designed to catch the bigger moves. Okay, still limit your risk, but catch the bigger moves. And that's the important part here. It manages to keep losses small without capping the gains. So you still benefit from that safety net that, you know, as soon as the stock starts going against you, it will give you an exit, okay? But when it goes on a nice run, it'll keep you in that trade, all right? So what will it do for you? Well, not only will it help you identify some pretty nice short-term as well as swing trade opportunities. And I should have clarified this from the beginning. First of all, this system is based solely on technical analysis, okay? Solely on technical analysis. And so it will work on anything you can chart and any time frame. So stocks, ETFs, futures contracts, Forex, options, you name it, 1 minute, 3 minute, 5 minute, daily, weekly, monthly, it really doesn't matter, okay? It works the same across the board. If you are more of an investor, okay, if you raising a family, have a full-time job, don't have time to sit in front of your laptop all day trading and can only look at this on weekends maybe or at the end of the month, promise me, and I'll show this to you, Voracity does an amazing job of selecting some long-term opportunities, and I'll show you that. But lastly, what it also does is it can predict the major market moves in the overall market. So if you chart, say, an index like the S&P 500 with Voracity on a higher time frame like the monthly, it'll tell you when a bull market is about to begin and when a bear market is about to begin. Okay, so enough talking and enough slides. Let's show you Voracity. This is my Metastock platform, and here what you're seeing on the screen here, first of all, this blue line that you're seeing here, this is a 20 period simple moving average. I'll hover over it and you can see it's a moving average based on the close, a 20 period simple, not exponential, not weighted, just simple, okay? And I use this for momentum because when you are trading with a trend, with the current trend, and with momentum on your side, it's very difficult to go wrong, okay? In other words, if we identify that this is in a strong trend here, and we have lots of momentum on our side, right? You can pretty much enter at any point here and be right most of the time. So what you want to do is make trading not only safe for you, but easy. And that's what this does. And the 20 period moving average really helps us identify momentum, okay? in other words, there's two ways to identify momentum. One is through the price action, right? Through the actual price bars. If we were to draw a line on these price bars, obviously we'd be in a nice slope here, as well as here or here, right? The problem becomes when it retraces. If we draw a line back this way, right, that we can easily mistake that for a downtrend, right? When in reality, it's simply just a minor retracement before a continuation of the current trend. And that's where the 20-period moving average comes in. So what you want to focus on are those periods where the 20 is either sloping sharply higher or sharply lower. Any periods where it is flat, you don't want to trade. Those are not your high percentage plays. Most traders lose money when they get chopped around during a consolidation phase, okay? And that's one easy way to avoid that consolidation phase. If the 20-period moving average is flat, the market's not doing anything, you want to stay out of there. But when it's sloping in your direction and you see price retracing back towards it and then bounce, you know, just like here, right? And the 20 doesn't even flinch. It's just a straight line up. That's a beautiful setup. And I'll show you many of these, okay? So we also have these little diamonds, the red ones and the green ones here, as well as the arrows, okay? So obviously anything in green has to do with a long trade. Anything in red has to do with a short trade, okay? The little diamonds here, these are a heads up. These are what we call a setup. So that means you shouldn't be jumping into the trade just yet. It's just a heads up that, hey, there may be a trade coming, okay? What you want to wait for to actually take the trade is the arrow. You want to see the arrow, okay? So if you see a little diamond followed by an arrow, that's when you get in, and you simply go with it until you see the exit. Now, one of the nice parts of the design here of this indicator on Metastock is that once you're in a trade, if you're in a long trade, every single bar, regardless of whether it's an up day or a down day, will be painted green, okay? And when you're in a short trade, it'll be painted red. That was specifically designed to help you remain disciplined, okay? Because a lot of times, and correct me if I'm wrong, I'm sure many of you have experienced this, once you get in a trade, you know, as long as the bars keep moving higher, that's great. But as soon as you get a couple going the opposite way, you see a couple of red bars and they pull back a little, you start to get worried, start to second guess yourself, start to think, well, I better jump out, or I may give back my profits, etc. And usually you get scared out of a trade. And so to help you avoid that, we paint the bars the color, you know, green for long, red for short, for the duration of that trade, okay? So that's what you're seeing here. And now, as I flip through charts today, and by all means, I want this to be as interactive as possible. So if there's a symbol, a particular stock, an ETF, a futures contract, whatever it is that you trade, that you want to see how Voracity did, type in the symbol, okay? Type in the symbol so I can show you how Voracity would have worked on that. You're not going to see it perfect on every chart. It's not a perfect system. There are losses. It's a cost of doing business. But what I can guarantee you is if you follow the rules and you focus on the setups that happen near the 20 while the 20 is sloping in the direction of the trade, I can almost guarantee you that not only will you have more winners than losers, but your winners will be much greater than your losers. So I want you to focus on those areas where there is slope, like we see here in the Dow, okay? And those trades near the 20. If it gaps and is far away from that 20, we're not interested. We don't want to take the trade. Now, with this indicator, you're going to get a couple of different training modules that go with it, that go into the specifics of which trades you really want to focus on and which you don't. We don't want to take every single one. We simply don't. We had to leave some in because of the way it was programmed. We couldn't eliminate all the bad ones without eliminating some of the good ones. So we decided to leave them all in, and train each individual who has a copy on exactly which setups to take and which not. But again, for the purposes here, since we have limited time, I want you to focus on the ones with slope, okay? So let's go through a few. This is Apple. Now, Apple's been one of the, one of, if not the cleanest and strongest charts out there. They're about to go through a split. But again, this is the daily time frame, the weekly, and sometimes it won't catch every single play because those indicators don't line up perfectly, okay? It won't catch it on every time frame. Sometimes it will. Here's the monthly. Some really nice setups, especially this recent one here. Now, from time to time, there will be trades that you will take when that 20 is flat. It's very rare. We go over it in detail in the training, but really what you want to focus on is if a stock has been in a channel and breaks out of that channel, even before that 20 starts to slope, that may be when you're interested. But overall, really shouldn't concern yourself with these because there are so many that are gonna set up for you that it's very rare to not be in a trade or not have an option for a trade. So you don't really care about the ones that are flat. I look at the ones with slope. There's plenty available. Now, this is a monthly. Again, if you trade the monthly with Voracity and stick to the rules, you will find some huge winners. Let's look at a few others. And again, by all means, type in any symbol you want and let me know. I see a couple that are already from Janet and Carlos. I'll get to those in a moment. Here's Home Depot. Missed a few there. Let's have a look at Nike. There's a really nice one there on that breakout, and one recently here going from here near 90.95 to 111. Let's look at gold, GLD. Carlos wanted GLD. That's the ETF for the gold spider. Some of the areas back in here, when you don't see a trade, that's because you need a certain number of bars for it to populate. Let's bring in a little more data here on the daily. And here's a perfect example of the kind of trade we want to take. All right. You go through a flat area consolidation area like this, and you see how many setups it comes in. All right. You don't want to take those. This is where you get chopped up. What you want to do is wait for that 20 to start sloping. And then as you get that retracement back towards that 20, and you get that setup, boom, there it is. That's exactly the kind of trade we are looking for, okay? Now, what you also want to focus on, let's look at a few others while we go through this. Let's look at Tesla. Who's traded Tesla recently? I mean, it's been insane, really. The PE on this thing is off the charts, but the opportunities really have been stellar, whether you think it's overvalued or not. And one of the things you want to focus on is that when you get into a trade, when it starts going against you, it'll take you out, right? And that's a good thing. That's a very good thing because you don't want to give back all your profits. And these days, with commissions being as inexpensive as they are, it's really not a problem to get out and then right back in 1 or 2 bars later, right? And so this is a perfect example here, is where we got in, it took us out quickly, didn't make much on that trade. About a week and a half later, got us back in again. That was a decent one, got us out quickly. Then we get in again, and look, the slope just keeps getting better and better on that 20. And there's the big one and got us out here. And then back in on the break of this high here on this mini consolidation area. Again, we'll go through that in the training. Okay. Janet wanted to look at RUT. Guessing that's the Russell. Yeah, it must be the Russell. Forget the symbol. Is it? Oh no. Maybe. You know what? IWM. Sorry, go ahead.
Try .RUT.
.RUT. Thank you. I was trying to remember the.
I think that's it. Yeah, there we go.
Yeah, it looks like. And so here's another perfect example. This was the drop in late February, early March, right? So, we were in a nice trend here, and there were trades that we took with the slope on that 20 higher going through. Then it kind of flattened out, right? And here's a perfect trade that we will teach you in those training classes. So at the time of this bar, if you look at the 20 period moving average, the slope was just starting. So there may have been a bit of slope, but nothing like this, okay, yet. So it may have been questionable to you to say, hey, should I be taking this short or not? But if you look at this, it was associated with a break of these lows. I'm going to try to draw it right along here. Yeah, right there. So as you break through that low, there's that red bar right there. That's a beautiful trade. And of course, it was a huge move. But what I really love about this more than anything is not that it's such a big winner. This was an odd event, not a very common occurrence. But look how quickly it got us out, right? So just about everything we made on that trade we kept. And that's the important part of this. And it recently almost set up long again, but not quite. So it almost came together, but not quite. So we'll keep an eye on that for a future setup. Can everyone see the video? Some of you are saying the video stopped. Everyone okay? Can see me and hear me?
Yeah, for Mark, my recommendation is if it's still not working for you, if you're looking at it through the browser, just hit refresh on the browser. That'll usually do the trick for you.
Okay. Let's go through a few others. Overstock. Again, when you go through a long consolidation like this, you don't want to take these trades during the consolidation. You want to look for a breakout. So you want to mark the highs and the lows of the consolidation range and look for a breakout. And if it happens with slope on that 20, even better. But again, look, there's slope here, slope here, slope here, right? So if you're looking overall of these and you're looking at every single trade, first of all, even if you took every single one, you'd still do okay, because even when it doesn't work out, it gets you out quickly, so the loss would be small. But the ones with slope is where you get those really, really nice runs. And this one continues to go. It's been an incredible ride. Let's look at GLG here. And we can look at some of the more popular ones as well as we go through this. Here's another great example, right? And this setup wasn't perfect, okay? This is one that I would tell you I would not have taken, okay? So why am I showing this to you? I'm showing this to you because, as you can see, after that nice run, it got us out before we gave back all that profit, right? But even without this, even without Voracity, what you want to do when you see a consolidation area like this is mark the highs, right? Mark the highs and mark the lows and wait for a break one way or the other, right? Mark those lows and then just wait for a breakout one way or the other. And in this case, so if we had a setup anywhere in here or along here, those are definitely what you want to take. But the break, and especially if it's a break to an all-time high, a very high probability trade setup for you, right? How many of you have traded Lululemon? It's been a great runner. And again, here's a couple of nice, easy trades to take. This one, not so much. Flat. It had just started moving here. But if you look along, wherever there's slope, that's what you want to see. That's what you want to go with. Or associated with a breakout to either a new low or a new high. Ray, these are daily. If you look down in here, the bottom right-hand corner, it's showing a D right now, so that's daily. That's the weekly chart and so on. So I'll be flipping through depending on what you ask for. Okay, but again, every time frame, the time frame really doesn't matter one way or the other. Let's look at a few others. So Amazon, which has been carrying this market for a while as well, some really nice easy trades to the long side. So you may look at this and think, sure, hindsight's 2020. We can go back and look at this, but I can tell you, and Jeff can back me up on this. We have many years of data on this, and if you look at the ones with slope, it's very high percentage that work in our favor, and that's because we have those two items that we're looking for: trend and momentum. That's what you want on your side when you're trading. Works exceptionally well. Netflix is another one that has been one of those monster stocks for the longest time. And when you get a nice stretch like this, that's what you want to see. That's what you want to focus on. Now, some of these, they don't look all that big on the chart here, but if you look at the price level here and how much they've moved, there's some very sizable trades. But again, you want to look at the ones that even whether we take them or not, when they don't work out, it gets you out right away. And that's what's super important to me. I want to make sure that I take the smallest amount of risk possible when I trade. I absolutely hate risk. Now, during this, when the whole pandemic started, there was a number of stocks when we went into lockdown that got hit really hard, right? Like Royal Caribbean, for example, right? And there was that run, and again, got you out very quickly. Now it's starting to come back a little. Here, we had an entry where we started getting slope, not enough slope for my liking, but breaking above that previous high, right? And now it's starting to move. So we'll see if it can muster up enough momentum to start recovering part of this. Carnival Cruise Lines was another, right? And there was that drop there, not quite recovered now. I have a few potential trade setups that I will share with you in a few moments here. I also want to show you the different parts of this indicator as well. Let me know if there's any other symbol requests. Thomas says CDNA. Sorry, Thomas, I had almost missed that one. Let me bring that up for you. Oops. Let me get that correct. CDNA. There we go. And there it is. A little choppier. We're in a chop here right now. Let's see if there's anything on the weekly or the monthly. There was a nice one back in here. And looks like we set up last week. We haven't triggered just yet. So you may want to keep an eye on this on the weekly time frame. We could be setting up to the long side there on the weekly time frame. Okay, now before I go, I do want to show you different parts of this because the folks at Metastock did such a great job putting this together. Expert commentary. This portion here, if you go to the top left here, click on view and click on expert commentary, it brings up this box. And you'll notice that to the far right, to the most recent candle, there's this little black triangle here. It always defaults to the most recent candle, but you can move it around either by clicking above a particular candle or by using the arrows on the top left of this little pop-up box, the expert commentary itself, okay? So if you're at a time when there is no trade active here, what you're gonna see is a paragraph about myself and Voracity. Gives you a bit of information, but you're gonna see a blank space here in between, and that's because there is no trade. Now, as soon as there's some kind of setup, you're going to see some text being populated here, and if it has to do with a long trade, it'll be green, short trade red, so it stays consistent. And it'll tell you that there's a potential trade setup, but it'll also tell you what you have to look for to confirm whether or not you want to get into that trade. So here it says you must wait for a trade above the setup bar's high to confirm a buy signal. So if and when that happens, that is when you are going to see the arrow populate. And then it'll confirm that, yes, it's currently signaling a long opportunity, and then go on. And if you're an options trader, it'll talk a bit about, which option you want to buy, what type of expiry, how far out, what kind of delta you're looking for, that sort of thing. It helps you do that. And then more importantly, as the trade moves forward, what you're going to see is a price level for a stop. So in other words, it'll help you trail your stop along as the trade moves forward. So with every new update, if you just move that little black triangle along, it'll highlight what your stop level should be. That way, if you're setting your orders in the evening and going to work the next day, you know exactly where to put that stop, okay? And it also suggests looking at the CCI for a potential exit. Okay, so that's a really handy feature, really holds your hand through the whole trade, really, I love it. But one of the other things they did here that has saved me a ton of time, if you go to the power console here and go to Explore, this is the scanner. So at the top here are all the different strategies. You want to go to the bottom here, and you have the choice between Voracity setups and Voracity signals. The setups are those little diamonds. The signals are the arrows, the ones that have already triggered. I like to search for the setup. So I'll just click on that. Then at the bottom here, we'll go down and select, which group of securities we want to scan. And of course, they have them all over the world. But I want to go to index constituents here, and I'll select, say, the Dow 30 and the NASDAQ 100 for now. And then to the right, you want to select the time frame. So, if you're a 5-minute trader, you can search every 5 minutes, every 60 minutes, whatever. I do mostly on the daily time frame, so that's where I'll search. I'll click on Start Exploration, and you'll see here that it'll quickly start to scan through. You can see at the top, there's 128 instruments in total that we selected. And even though I'm running numerous things on my laptop, I've got the YouTube session live, I've got the GoToWebinar session, I've got the charting platform, everything. You can see how quickly this goes through. So it returned 7 potential trade candidates. It rejected 121. Now, out of these 7, we can sort through these columns that we have here. So if you see a number 1 on either the long or the short column, that's the type of trade setup it is. So here, really, if we sort by longs, we have 6 out of the 7 potential trade candidates are long, and there's 1 short. You can sort by price, or more importantly, by slope. Remember when I was telling you about the 20-period moving average, that degree of slope? Well, it took us a while, but we came up with a calculation for that slope. So what you want to do is sort these, and look for the highest positive number and the highest negative number. Usually anything over 3 is a really good, strong slope, okay? I only searched through 128 candidates, so we don't have many here, but I'll give you a few others to walk away with. But all you have to do is highlight it, click Open Chart, and it'll show you quickly the chart, and you can decide whether you like that degree of slope or not, whether it's breaking above a previous high, so it looks like a breakout, etc. Here's FAST. That's the kind of slope we're looking for, right? So this is great, and especially when it consolidates a little here. So, if we wanted to, we could draw a flat line across the top, yet across the lows here, it'd be upsloping here. So that's an ascending triangle, and you get that setup. If it triggers, we should be off and running to new high. So I really like that one. Let's look at one more here. Netflix. There we go. Well, that's a big day. It's already moved a long way away from the 20, and there isn't much slope there. So we would ignore that one. But there's a few others I want to share with you here before I turn it over to Jeff, and he'll tell you how you can get yourself a copy. SLV, the ETF for silver, is setting up today. So keep an eye on this. There's still a nice amount of slope here on that 20. So if it triggers and you get that arrow, that'll be one that will most likely trip that recent high there. Let me look. GSS. This is a gold play, very inexpensive gold play. Again, had shot up, consolidated now, and here's that setup. Lots of momentum behind this play. All right. So that's another one to continue, or to keep an eye on, I should say. AGQ was another one, I believe, that I looked at. Yeah, similar one. So these are the ones, and you will find plenty of these. Again, what your job will be once you run the scan, and you can run it across a much bigger group of symbols, is to compare one to the other and look for the characteristics that will make this a much better trade over the other. So in other words, you want to obviously compare the degree of slope on that 20. You also want to look at whether there is support or resistance in your way, or is it breaking out to a brand new high? Is it breaking out of a channel? Is there a chart pattern that goes along with it? These are all items that we will train you on during the two training components that go with this, okay? But again, a very simple, easy, and safe way to trade. We put the odds in our favor by trading with the trend and having momentum behind that trade. And the Metastock platform makes it super easy to search for, and then with the expert commentary, kind of holds your hand throughout the whole life of the trade. So it's very simple. So happy to answer more questions, but since we're close to the end of the time that we have, I'll pass it back to Jeff so he can let you know how you can get yourself a copy.
All right. Yeah, and maybe before we do, I had just a couple questions Ahmed had that I thought might be good to ask. Ahmed says, can you ask him which time frame he prefers? I know all of them work, but do you prefer a specific time frame?
So I prefer the daily just because it fits with my schedule more. I don't have to be in front of the computer all day, and I can go and do whatever I want. But one of the time frames that I really like, here's a tip, one thing I've used over the years that I really like, and especially if you like trading the type of stocks that have gotten us to the levels that we're at today. So the techs, I'm talking about the NASDAQ components, right? The Teslas, the Amazons, and so on. If you look at those on an hourly time frame, on a 60-minute time frame, not only will you get good setups, but if you're an options trader, you can trade those using weekly options. So although they're very expensive stocks, the weekly options are much more reasonable, right? Because if you trade on a daily, you want to buy yourself some time. So if you're going to buy a call on Tesla, you want to go at least 60, 90 days out. It's going to be very, very expensive. But on an hourly time frame, you only expect to be in the trade a few hours to maybe a day and a half, 2 days maximum. And so you can buy an option that's only 1 week to expiry, for example. It'll be a lot less expensive, and yet you get some big, big moves. It is really common to see some very large moves on the hourly time frame with those NASDAQ stocks. So go and have a look for yourself. You'll see what I mean.
He says thank you to me, but I'm sure he also means thank you to you. He also asked a little bit earlier, he said wait for the slope 20 moving average to be headed up. Is it important that the slope be too sharp in its uptrend? In other words, is that maybe a signal that it's getting overbought?
Oh, well, when you see something like this, well, and actually let me give you a real, let me give you a better example. Tesla, right? So Tesla went almost vertical here. right? So here's Tesla, this huge move. Now, at this point, the slope of the 20 doesn't really matter. The only way it would matter to us is if Tesla retraced back to that 20, and then we get a setup. So if it's back close to that 20, the higher the degree of slope, the better, obviously, right? But while you're in the trade, the slope no longer matters. But if you get really far away from the 20, and the way I would say to try to judge whether it's too far away or not is by looking at the history of it, right? So if you look back and you say, well, how far has this moved away from the 20 before it snapped back, during previous trends? And now you look at it and you say, well, it's at least that far, if not farther away from the 20 than it has been at any previous time. Then that's very extended, and you should expect the pullback. Now, if it's at an all-time high, it could continue going, right? There's no resistance overhead, but generally you want to start taking profits when you move away from that 20, and the further away you go, you should be more and more comfortable taking profits, okay? But make no mistake about it, the higher degree of slope in the 20, the better the odds are for you to have a winning trade. But you want to make sure you're getting in near the 20, not far away from it, okay? So even though here the slope is almost vertical, you don't want to be chasing it and getting up here, okay? It's very, very dangerous. It can snap back at any time. I hope that helps.
All right, I think it is helpful. Ahmed asked one last question. They said, please don't miss this question. Why don't we have a formula for the system investor? And I think it was, I'm trying to remember back to when we did it, and I think it was because there is a bit of a subjective part of it, and that's how much are you sloping?
Right. I mean, again, if we take every single one, right, the performance statistics would be much different than if you're just looking at the slope. And the intent is not to take every single one. That's why we provide you with the two training modules, so you know exactly which ones to take and which ones to not take, right?
And we did. Oh, I'm sorry. I'm going to let you talk.
No, go ahead. Go ahead.
I was like, we did kind of come up with a way to measure the slope and that kind of stuff, but where do you make a cutoff and how do you kind of like do that? And I think after us trying, I think we did a really good job of measuring that slope, but it took us a good 20 or 30 attempts to get it right. So
absolutely, and that's something that everyone will have to find their own comfort level with. So, for example, for me, I don't look at anything that has less than a 3 on it. When I do that scan, if the slope is less than a 3, I won't even look at it. But it's very common to find a slope of, say, 24 or even 40. You know, some of them are very sharp, and those you want to take all day long. You know, but anything under 3, I'd personally stay away from.
Thank you, Vince. Thank you. I'll take over now. I'll talk about this. And I do, this has been, I'm very proud of this. This is a project that I worked very hard on the programming for, which is a little bit unusual, but we did work on that slope forever, it seems like. And I'm very, very proud of the results. Vince, you did a good job at providing some guidance and kind of the help and kind of the math, but I just love the way that this product put together. And it's been a very, very popular product. Not only do a lot of our Metastock users use it, a lot of our Metastock staff uses it to find and identify trades. There's several people on my sales team that say that this is their favorite product. So it's a very, very good one. Vince does a really good job of showing it. The product itself includes the Voracity template. It'll include the setup exploration. So the setup exploration is going to list everything that could have a trigger within a few days. And so if you're looking to build out a watch list of things that are going to probably fire off at maybe a trigger in a couple of days, the setup exploration is what you're going to run. You also have the trigger exploration. That's really good if you're running it in the middle of the day and you want to see anything that actually happened to trigger on the current bar. That's what that is for. You get the expert advisor. It's going to tell you, okay, here's you have a setup. Here's what price you're going to buy it at, and it gets really, really specific. And if you're in a trade, it's going to say, here is an updated stop loss. And it gives you an updated stop loss every single day. And so all of that is done in the expert advisor and the expert commentary. What's not on this side, and I need to add it for the next time, is included with this is those 2 training sessions that Vince is talking about. Those are included free of charge. And he does, I hope you enjoyed the presentation today, but I think he does a very, very good job of kind of laying things out and making them very, very easy to understand. So that's also included. In terms of the add-on itself, the retail cost on this is $1,997. And we're going to do a webinar special today where we're going to do it for $997. We also are going to back it with our 30-day money-back guarantee. So you can try it. We're going to give you a good risk-reward ratio. If you don't like it, you can return it, and we'll give you a refund within 30 days. The thing is most of you are going to like it. Statistically, we've sold enough of these things. People really, really enjoy this product. And so to take advantage of that, you can give us a call, or you can let me catch my breath here. You can visit us online at metastock.com/tradingwinsv. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. Okay. The other thing that I will add, if you're watching, this is the first time you've seen Metastock, maybe you're not familiar with Metastock. Metastock, one of the things we like to talk about is the fact that it's been rated the #1 software in its price category by the readers of Stocks and Commodities magazine. And I think that's like 25 years straight. 25 years in a row, it's been rated #1. So if you don't have the Metastock platform, this does require Metastock. And as part of this, we will throw in a free trial to Metastock as part of your Voracity purchase. So you can see what you've been missing with the ability to do the scanning and the testing and the expert advice. We're just all going to make that so that you can try it. You'll pay $997 to try it. If it works well for you, great, keep it. And if not, there's a very, very low risk. And I know as traders, that's what you like to see. So give us a call, 800-882-3040. Visit us online at metastock.com/saleschat, or you can go to metastock.com/tradingwinsv to sign up. Ahmed says, thank you, Vince, for answering all of his questions. And Ahmed wants to know about my license plates back here. So I had somebody ask me if these are from all of the cars I've wrecked over the years. They are not. I just have been collecting license plates from vehicles that I've owned since I started my first car in like the 90s. So these are just different license plates that no longer are valid, and I use them as as decorations. That's all, Ahmed. There you go. And none of them. Well, I think one of them is from a wrecked car. So anyway, there you go. 800-882-3040. Thank you, Vince, for coming today and spending some time with us. Good job.
Thank you, Jeff. Thanks again.
For all of you that are out there, thank you for coming today. I hope you enjoyed something, enjoyed the class and learned something. We'll see you at the next event. And thanks for coming.